Tata Consultancy Services, or TCS, is a giant amongst the outsourcers. Founded in 1968, it now turns over in excess of $10 billion annually, and based on this figure, it is India's largest IT services company. In the last 12 years, TCS has acquired 14 companies, most of which have had a strong IT services flavour. With 117 delivery centres globally, it easily boasts infrastructural suitability for truly global accounts with global needs. All this context and this background information begs a number of questions, and I'm delighted to say that I'm going to be putting my questions to Abid Ali Neemachwala, who is the VP Global Head at TCS BPO Services and Process Excellence. And it's great to have you with us, Abid. Hello.
Hi, Susie.
So I'll start off with one question that really does come from looking at the context that we've just discussed in the introduction, which is based on the fact that you have such a massive asset base with 117 delivery centres globally. Could you just talk to us a little bit, Abid, about how TCS manages to remain flexible with such a large global footprint?
It's a great question, and one of the things that internally we emphasize a lot is customer centricity. I think everything that we do is focused on being relevant to our customers. And that is why if you look at the TCS's organization structure around 2008, when we realized that we are getting larger and larger, we reorganized into 23 different business units. Each business unit being able to own the customer relationship and being able to act as if it were a company or a P&L of its own, which gives a high level of agility to the company. So while the customer sees the power of TCS from a capability, resources, and investments perspective, when we go in front of a customer, we are able to act as a small and nimble organization, very flexible and responsive to customer needs, given our organization structure and our customer centricity.
So as far as future development is concerned, looking at merger and acquisition activity, how does that roadmap look for you? Are you looking to continue with the pace of acquisition that you've currently been enjoying over the last 12 or so years?
We kind of look at rolling a 3 to 5 year strategy outlook, and then we understand where the markets are moving from the deep insights we have with our clientele. We analyze the trends and see what the customers would need in the near future. And then we look at our own portfolio and see what are the capabilities we have and what are the capabilities that we need to have for the future which we may not have today, and then look at whether we need to build those capabilities. We are best positioned to build those capabilities internally, or are we better placed if we make an acquisition. So that is the broad thought process which goes into making acquisitions, and whenever we see that opportunity, we kind of go ahead and make an acquisition. What we don't do is we don't acquire for scale. We acquire for access to markets or access to capabilities that we may not have.
Okay, I'd like to just spend a few moments on some of the bits of information you shared with us there, Abid. So over the next 12 or 24 months, for example, where do you see your footprint expanding into as far as new territories are concerned?
See, right now we are, especially for the business process services business which I head, we are very focused. This is a turning point for the industry. We are very focused on seeing how we can make the digital revolution, the social media, the big data and analytics, the cloud, the mobility, which technology is enabling our customers, our enterprise clients to transform their business. How we can be part of that, and especially from a business processes perspective, how we can make a positive impact to help our customers adopt these digital technologies faster. Just as an example, retailers, when they started doing web-based selling or internet commerce, they were using their existing supply chain to do the fulfillment of the orders that are coming. But those supply chains were more retrofitted for web commerce, not necessarily designed for web commerce. We are now helping customers design their supply chains for being more efficient and shipping goods to customers in a shorter turnaround time. And that is what we call as the digital business process services offering of ours, which has been very popular with our customers. So in each one of the areas, each industry verticals, we are identifying such opportunities and we are taking them to the market, and we are investing in technology, in the business process, in the domain to be able to take those to the market. The other trend that we are seeing in the industry, which will become a norm in the next 12 to 24 months, is utility-based models. As customers look at technology projects and the capital investments that go into technology projects and the project management that goes into it, customers are asking the question, can we have process as a service rather than putting an IT platform and then transforming our process? And again, TCS is very uniquely positioned in that because we, in about 2004-2005, came up with this innovative concept of platform BPO, which is nothing but process as a service. And we have significant examples and number of platforms that we are able to offer to customers in the utility mode, where the customer's CapEx investments are very low or close to zero, and they are able to pay us by the drink in a transaction-based or a outcome-based pricing. So that's another business model change which is happening, and we're investing heavily, creating utilities across various industries wherever we find an opportunity. Also, the business process services itself, from an expectation from the customers, is changing, not just to be a transaction processor, but a business consultant and a transformation partner. And we have invested in a transformation methodology called 4, where even if the scope of TCS services is limited to a particular task or part of the process, we help customers reimagine their end-to-end process and help them become best in class. So these are some of the examples of how I see the industry panning out and how we are preparing for the next 12 to 24 months, Susie.
Okay, good. So a couple of points that you've mentioned there, such as kind of a larger focus on digital services, mobility, cloud, etc., and therefore acquiring certain organizations that can help you fulfill those capability gaps, if you will, and those developing demands from the client. What I'd like to focus on, though, is where you're talking about offering processes as a service. So this is something that we're certainly seeing at sharedserviceslink.com. I would really appreciate it, Abid, if you could just articulate where you believe that that shift is actually coming from the captive shared services organizations that you're actually dealing with. And actually, what is the new service that they are expecting from you as far as asking for your delivery to be more service-based rather than process-based? How do you articulate the shift from where they were in the past to what they're asking for now?
Great question. So, Susie, in the past, they were looking more at cost savings and year-on-year productivity, which is typically delivered by the labor cost arbitrage and delivery excellence or a global delivery model. Today, that is table stakes in the BPO industry and as a provider. Today, customers are asking more for how you can fundamentally transform their process and take it to the next level, which invariably requires a technology refresh for the underlying IT applications that the customer has, which enable that process. Now, when the question comes about changing the underlying IT applications through a technology refresh, leveraging some of the digital technologies that we talked about, the customer is faced with the question whether they themselves embark on a program to do those IT changes with the technology refresh, or is there a supplier or a third-party partner like TCS available to do it for them, or who has investments already made where they could have a ready-made platform available on which they can move their processes to? And that is what the customers are asking, and that is where we have been able to make upfront investments in these IT platforms which leverage digital technologies, which are available on the cloud, which have mobility built in, which have analytics built in, which we are able to offer. A good example is, the UK life and pensions market, where today we have over 9 million policies that we service. We started way back in 2006, taking a small portfolio and transforming into a digital platform on the cloud and providing it as service to the first customer. And today we are multi-tenanted, we have multiple customers, multiple portfolios, and the business model or the commercial model is based on a price per policy that we can offer to the customer. across various other segments, whether it is in the banking area, whether it is in the finance and accounting area, HR space, in the supply chain space, in the pharma area. We've invested in such platforms and are able to offer services to our customers on digital technologies, on the cloud, in a transaction-based or an outcome-based pricing model.